Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trade House. Oh, daddy's back. Oh, are you talking about me? I'm not daddy. Right? You're my daddy. I'm just kidding. All right. So, Sebastian, how you doing? Patrick, what's going on? Always glad to tune in. Hey, how you doing, John Doe? Hello, hello, hello. What's going on, everybody? All right. So, in this video, we're going to have a lot to talk about. We're going to talk about CLOV, SoFi, Palantir, Marvell, kind of what's going on in the stock market. We're going to give a talk about hyperinflation and melt-ups and how that affects the overall stock market. We're going to go ahead and talk about this as a lecture that I went ahead and put for you guys. We also are going to talk about healthcare stocks and hyperinflation. There's a lot going to be unpacked here. And we're also going to talk about Carvana, which I think is a company situated here in Phoenix. I think that's where the headquarters is. Correct me if I'm wrong, but it has been basically soaring like a touring. It is like literally, and it's funny because it's I was accustomed and heard of this stock way before in Christmas. I can't say by who publicly, but we talked about it when it was around $20-$30, but this thing has literally skyrocketed to 4,900% increase. Literally went from $4 to $205. And it's useful to take a look at these companies to look at what intrinsically happened that caused it to soar and how we can apply it. And again, you're basically going to see the same pattern of where we created the book, How to Find the Next 10 Bagger. It exhibits the same type of criteria. So now that we have like a skeletal model of kind of what's going on with Clover, and also we're going to talk about short interest for Clover. But yeah, so right now the stock is up 2.55%, so about 2.5%. We'll go ahead and update this right now. So it's kind of beating the Russell 2000 increase here. But we're starting to see, and it's funny because if we were to just go here to, let me just go ahead and just stop the share real quick. Un momento, please. We go here, and then we're going to go present. Boom. All right. All right. Like I said, this thing's basically bouncing off of its 50-day MA. What I wanted to put here is I wanted to put IWM, which is for the small caps. Because remember how we did the technical analysis? It should save our technical analysis on there. So we should have IWM on here already saved. So yeah, so you can see the technical analysis, kind of what we were doing here, and overall in the beginning of the year when we were doing this analysis. So it shot up here. The next level of resistance was passed, and now we're basically falling in line here. If this thing passes this trend here, it's kind of trading within the 50 MA and this, then we're about to pretty much gap up. And the next level of resistance, see how it's all mapped up? It's going to be this line here, which if you go all the way here is where this is here. And again, this is all going to be the second phase part of the Mastering Stock Market course about kind of how to do technical analysis like this in a very sophisticated manner, but in a very simplistic form without having it to look like sloppy Joe, right? Because at the end of the day, it's about being able to interpret it and moving forward. So it's pretty much trading in here, and I think it's about to pop, right? So this is small caps, okay? So there's that. And I like to keep the technical analysis going to just kind of revisit kind of what I was seeing, right? 2.4 million shares dump at the close today for what? CLOV or small caps? And then, so there it is right now. Oh, and there it is. $4.02. The stock literally went ahead, and I think that's your dump right now. You're talking about real live. You start to pretty much see the dump there. And the question is this a, there's always a buyer and always a seller. So ultimately, there's going to be some speculators that like to make money in the short term, but overall in the long term, people tend to make the most. So with that regards, my recommendation is just kind of completely dump the stock and don't even look at it anymore. I'm just kidding. I can't recommend anything, right? That was a joke, right? So now let's go ahead and take a look at the max. So the max right now, CLOV is down negative 60%. It's slowly curling its way up, and it's kind of fighting that $4-ish region that we talked about before. This has finally reached close to its intrinsics, and then now it just needs to grow in a position where it can match our overall upper level of the bull case at around $18. But you can see this thing's starting to curve up. Palantir has already curved up. One of the stocks we pulled out before has curved up, right? Marvell, which is one of the stocks we called out when it was trading, I think in the sub 20s, right? So now we kind of basically talked about all these folks. One of our folks in the stock terminal went ahead and did Donald Trump stock, and take a look at this here, and it's been pretty much soaring. I think it has to deal with what they're saying his rally, something like that. do 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 do. Okay, so let's see. So we did that, and Clover Health short interest has been falling down in October. So, this is one of the things where, if you don't recall, back in the day, whenever the stock always ran, always had some good news or something, and it tried to run up, it was always dropped back down. I'm not saying those days are over, but as the short interest starts to drop down more and more and more to a point where it's insignificant, the company's going to become very sensitive to the fundamentals, like what we've been saying. Okay. Also, one thing I want to point out is there was an article that was published here saying overall Clove has been doing really well, price soaring 330%. And it says here, nonetheless, watch this. Nonetheless, only a fool would ignore the risks that a loss-making company burns through its cash too quickly. So they're talking about negative free cash flow and all this. And all they're doing is they're using something that you can basically just Google. And I just want to have a few words here for this. So this is a company called Simply Wall Street. It's a company that basically gives out financial data and whatnot. So I guess we can say that me and them are competitors, right? But this is a great example because we already know that their last quarter, they're profitable. So they're saying that they're going to be stopping the burning of cash, which contradicts this article, which obviously was generated automatically, right? And the goal is to have people that click on this button here and overall get to their website to potentially sign up and to get overall the sign up sheet and make money off of their subscribers and overall what Yahoo Finance's traffic is. So it's the editorial team, and what you're going to start realizing if you follow this and all the articles that they posted before in the past, it's always been Clover this, Clover that, it's a bad company, but it's continuously going up because, again, these are journalists writing it. And then some of them are software experts. They know nothing about Wall Street, and it's just basically software people trying to make a nickel and dime off of the retail investors. And this is kind of where our platform shines, right? Because not only does our platform provide 2.5 billion outputs of institutionally graded data, it provides you a way and how to use it. In over 650 videos now it's over 670 videos on YouTube showing you how the intrinsic value calculation works over time with Enphase, Tesla, AMD, NVIDIA, and I guess we could do Carvana too. And then now Clover, you could start to see Palantir, SoFi, right? So we actually basically teach what we preach to our educational platform rather than this. It's like, oh, here's our data, try to become rich, when in reality, majority of people don't. And you can see the level of detail because we've hyper-analyzed Clover to a point where we know it more than we know our wives, right? Like if I were to tell you, when's your anniversary, you think you can remember? Some of you will, right? But you could see that this company doesn't know what it's talking about, right? And it does this for all these stocks, right? And it's just a supplier of data, but it doesn't teach people to go from zero to hero, okay? It's basically pretty much you go from zero to zero, right? And that's kind of all I have to say about this, okay? So now let's go ahead and talk about hyperinflation and the melt up in the stock market overall, okay? So, the definition of hyperinflation is when inflation exceeds 50% per month. Obviously, we're not gonna go there, okay? But the excessive causes of it is excessive money printing, supply chain, right? And you can look at Germany, Zimbabwe, Venezuela as indicators of what hyperinflation looks like, okay? Now, the big thing that you need to know is it erodes purchasing power, okay? And people are going to basically start getting out of cash and going into real estate, gold, and stocks to hedge against devaluation of their currency. Okay. And the overall is of this is you're going to get a melt up where everyone in the market is going to start basically FOMOing into companies. And you're going to get a sudden high volume in stocks, and it's going to be divorced from the underlying fundamentals of the business. And an example of this is a dot-com bubble, housing market bubble, kind of like a somewhat quasi melt up, right? So, I think we are going to experience this in our lifetime. And I think it would have been, foolish of me not to explain it and just have some type of discussion on it. You see, the beautiful part is if stocks are divorced amongst their fundamentals, that means the options chain is going to be crazy. And if we know the stock is fundamentally above its intrinsic value, we can basically do covered calls and milk the shit out of the options and basically get our shares back for free and just hold that, play the options market and have essentially like a little business in a way, right? And again, when this happens, we will be removing ourselves from YouTube because I do think if the channel does get big, it's going to get to a point where we want to make our moves in a way that are not how do I say this? The people that are in our platform are going to get to know what are my thoughts from someone who's not a financial advisor from an educational perspective. And those thoughts are going to be, and those actions and thoughts are going to basically make people multimillionaires. Okay. But I don't want to put it on YouTube because then it's going to basically equalize the playing field. Because if this thing does go up in an insane amount, because I'm going to explain it in this talk really quickly, then it gets to a point where, okay, let me just be clear. Okay. Things like this don't come very often. Okay. And so we're going to go ahead and milk the crap out of it. And once it gets to a position where it's getting to a point where it's very difficult to put out this information without, having an alpha, then we're just going to basically start concealing this information. And I know that's terrible, right? But at the end of the day, we've given out the platform and people can ultimately join. This is going to make a lot of people rich, especially if their software works, because I think we found the Coca-Cola of AI. Okay. So that's what I have here. So people are going to, I think, get out of cash. There's going to be a rapid currency devaluation and it's going to go to stocks, right? And, there's going to be speculation driven by fear. Panic buying is going to get into equities having a melt up behavior. And there's going to be distortion of value where things are going to trade above its intrinsic value, which is great. You're going to get supply chain issues, all this other stuff, which honestly, I'm not that much of an expert in, right? But the big thing here is you're going to get an asset bubble. So people are going to start going into tech, which is Clover Health, right? Is part in Palantir, right? And then people are going to go to crypto. And you're going to, and gold. And if you were to essentially look at gold prices, you could start to see gold prices are up 32%, which is insane, right? And if you go ahead and take a look at the Bitcoin price, it is up 57% this year, okay? So ultimately, it's looking pretty damn good for Bitcoin here, okay? And people are already anticipating this, that it could happen, okay? I just want to bring it on your radar. We look at tangible assets, commodities, real estate, and obviously healthcare. And then people are going to somehow try to preserve it. But overall, hyperinflation, it erodes the currency, it increases demand for stocks, and you're going to have speculation up the crazy wazoo when you get melt ups. And that's kind of essentially what's going on there. Okay. So now for healthcare stocks and hyperinflation, there's going to be different types of phases. Now that we already know the nature of the healthcare business, there's always going to be consistent demand, right? There's always, people need medications and overall Medicare and medical care for all, right? So they need help, right? And healthcare is less sensitive to price changes because people prioritize it, right? Regardless if the cost goes up or not. Insurances obviously are subsidized by the government. You're going to get government support. So I don't really see any problems there. The only thing is pharmacies can increase their price, but there is a cap now, which the government sees. That's why they did this, to battle against what's coming to the future. Okay. Um, and the beautiful part about the melt up part of it is people are going to shift to high growth healthcare sectors, biotech, telemedicine, and AI like the Clover Assistant. And I think this is going to basically shine. Okay. And yeah, so that's pretty much what I have there, right? So it's defensive. You're going to get some good returns, and it's going to look pretty damn good. So that's what I wanted to talk about there. Now for Carvana, we talked about, this company has been just, in year to date is up 319%. Max, it's up, 1700%, but really it's up, let's see, it's up 4,000% more, 4,000% plus, almost 5,000%. So what criterions can we see about Carvana that made it so good? So you can see gross margins went from negative 1% to 18.8%. Revenue went from 42 million to 11.6 billion. Net income went from negative 15 million to 714 million. Shares, there's actually was a buyback, so minimal share dilution. In fact, it was less shares than where they started with. Book value went from negative 88 cents to $4.42. And if you don't recall, this company fell near its book value of around $4. So it's kind of funny how it fell near its book value. Operational cash flow went from negative 30 million to 815 million. Free cash flow went from negative 34 million to 785 million. And working capital literally has been increasing nonstop. And again, you could get this data from our stock terminal. So now what we can do is we could take the 10.7 billion and we can multiply it by 5% and then keep increasing the percentage until we get an estimation of free cash flow of 788 million. So let's go ahead and do that. So we go here. We're going to multiply it by our 0.5%. So that gives you 538 million. Obviously, it's 788. So we're going to do, okay, good. 7.5. Okay. So we'll go ahead and do 7%. So we already know that this thing is going to grow 7%. So now let's look at the overall revenue. So the overall revenue is growing like crazy, crazy, crazy. Okay. So what we can do now is we can open up the Al Stock Trades platform here, okay? And we can go ahead and give me a second here. There it is. And we can look up the calculation here, and we could see kind of where we're at, right? So what we can do is we could do the calculation in 2023 when it was trading at $4, just to see if maybe we could have done it, right? So here's 2023 is 10.7, right? So we could, again, we already did the math, 10 points. So we'll just, the free cash flow here was already 788. So we already had the free cash flow. I mean, they were already free cash flow positive. So we'll put 788. And then the biggest part now is using the revenue here and to calculate the percentage. From 2014, they were growing at 42%. In 2023, they were growing at 10,771. That's about 85%. Now we may have to adjust this, but we'll see. Share count is 109. And then we're going to go 10 years into the future, which obviously you get a ridiculous number like this because I said the revenue is just too unrealistic. So now we're going to have to figure out kind of what is a good number to use. Obviously, going from 42 million and on, they started early. And you always want to check the stock for its max to see when it was first started to trade. So it first started to trade in 2017, right? So we can't use 2014 numbers. This pulls out data from when the venture capitalists came in. And obviously the venture capitalists got a really good deal, right? So that's good. So let's go to 2017 now. We'll use 2017 numbers at 859 million. There it is. So then that's 52%. Okay. And then you could say, okay, this thing went ahead and doubled, so it is growing crazy, but we want to take it. And again, it's still, again, this thing could continue blowing up. It depends how big this thing can get. Currently, the growth rate is not as high, obviously. So we can go ahead and take 2018 numbers at 1955. Okay. And then you start getting this. But again, it's growing at 41%. Okay. That's still high. So then once you get to this, you have to look at what its reality is. So then you have to look at more closely last year and this year. So the revenue actually went down. So you would go ahead and put 0% to see what is the baseline value. So if you put 0% of Carvana, you get an intrinsic value of $32 to $79. That's why I started speaking about around 30. I was like, that's really interesting, right? So when it was trading at kind of, it almost looks like an AMC analysis, but nowhere near, because AMC is like just like sucks, right? In terms of its but for people that understand what I'm saying, in terms of the, if you put 0%. So in 2023, it was pretty much at $4, right? And if you put it at 0%, we know that it was trading below that, right? So we know that there was value in Carvana, right? It's just intrinsically the company's worth a lot because they have a lot of assets, right? I bet, right? So then you want to go ahead and go to Yahoo Finance, right? You go to CVNA, right? You see how we're consistently adding more data and data, just trying to get to a whatchamacallit, just a good assumption. So you could see that Wall Street thinks it's, it used to be going 24%, 32%. So overall, 16%. So you add 16% now, and you can see Carvana is around, recession is 75, and then the bull case is 254. Now, you might be like, oh, that's a bunch of bull because this thing is $4, but look at the price now, $205. So you can see how the intrinsic value calculation works, right? If you would have known about this company and this company fell from 345, you would have been able to put, let's say you put $1,000 in, right? $1,000 divided by 4 is 250 shares. 250 shares multiplied by 203. You would have taken $1,000 and turned it into $50,000. Okay, so you could see and that's just $1,000. That's just, you see the power of the intrinsic value calculation. Okay, so now that you have, which is why this is such the software that we have in the overall platform, especially when there's a recession or a bear market. You should all be salivating at the mouth because you have the power of Wall Street at your hands. But overall, if you look at the growth rate of Carvana, if this thing does grow, let's say to 20%, 25%, then yeah, this thing can go up higher. Let's say if it goes up 25%, then yeah, you could see these prices. But overall, technically, right now, if you want to look at the technically, it's growing around 15%. That's just one quarter. And you can see this is the price. So you can see we're nearing the bull case. Okay. But obviously, if it grows more, right, or if it makes more free cash flow, then you can basically start seeing. You can see how accurate this is once you start putting in reality, right? So there it is. If close goes some crazy amount, at what point would you sell of your long-term CLOV shares and then buy? So this will be part of our mastering and our lifetime access. So we're going to be documenting that within our research edge from an educational perspective. So that's going to be locked away for members that essentially have found value in what we say, right? Conspicuous. Do you have any thoughts on Spirit Airlines as a short-term quick trip? I haven't looked at them, to be honest. But the ACO part of the revenues have been discontinued, right? Yes, that's true. How fast was the Medicare Advantage part of the business growing? Yeah, so you could look at that. So I think it's around 11%. Again, not financial advice. Just my recommendation is look at the Clover Health most recent report. You can look at the investor relations website. You know what I mean? And that's going to be all part of the mastering of potentially how to do that, right? Because again, when you start from zero, it's very difficult to learn that, right? Yeah, and I think they said they're gonna be turning on the growth machine, right? Okay. Oh, I love you too. All right, how you doing, Bill? What's going on? How about the I'm not too sure. Right share? I'm not too sure. So now let's go ahead and just kind of do one for Clover. Now, I think Clover is going to end up returning to growth. Now, if they go ahead and go to a growth phase like Oscar or Alignment Healthcare, so if they do, Oscar is around 45.86%. Okay. 45.86%. If they do that, let's say they do 45%, we'll put 45% straight off the bat. Then we can go ahead and use their, 44 plus 25, just their current free cash flow of 69 million, which potentially could be a lot higher. Just from this angle right now, we got to go 10 years into the future, of course, and discount back at today's value. We already see a stock price of $36, right? So you can see the value of this. And this is basically based off of 69 million of free cash flow. Now, if this goes ahead and, if you were to extrapolate 69 million times two and divide, multiply that out by the full year, 138, then you can go ahead and potentially see $73, right? So you can see the overall, anywhere between, let's say, $30 to $70. So, and again, if that's so difficult to ascertain, we can put the stock price of 60 cents here. Remember, I used to do this, and that's like a 12,000% increase. So you get 2,400% increase, 5,600% increase, 8,000% increase, and 12,000% increase. That's such difficult to find a stock at 60 cents because you just can't find those things, to trade at book value. But right now it's at $4, right? So if we do that, then you can see it's only 1,700% up, which if you go ahead and look at Carvana, Carvana is, up overall. What is this? Carvana is up, you can see here 4,900%. So, these numbers exist. These numbers truly exist. You really got to know what you're doing, right? So I'm very optimistic of what I should expect. Now, let me say something, okay? Now that we went ahead and did all this analysis and up and down, how you doing, Patrick? Love you a lot. So now let me just, let's talk reality here, okay? All right, let me just first take a breather here. That was a lot of talking. Oof. All right. All right, guys. So let's talk reality. Okay. Let me just kind of cut these tabs off here. All right, good. All right. So let's talk reality. The world is not fair. Okay. I don't have to tell you this. You already know this. Okay. But sometimes, we underestimate how unfair the world is, right? The job that you currently have right now, that you're working so hard and working late hours, the only person, if you have family, that's going to remember how hard you worked is your wife and your children, right? Or your husband, depending if, again, back and forth, right? So depends who you are and what gender you are. If you're a wife, if you're a woman watching this channel, then your husband, right? But, or, could be your wife too, right? Who knows? So, the point is, unfortunately, people just kind of don't get this until it's too late. You work your ass off, and you expect, not expect, but you work you work your butt off, and you are like, if I work hard, then the American dream will work for me. Sadly, I used to believe that. I really do. And you could see it from my life, right? I mean, I've done pretty well, but I'll tell you something right now. Life is not like that, right? You go in and you work your butt off so your boss can notice. And it gets to a point where if you're way better than your boss, and your boss wants to shut you down, right? Because your boss has to have a job too. So you can never outwork your master, right? You can never outperform your master. If how many times have you heard the story? I applied to this job, but I was overqualified, right? It's so sad, right? The point is, I'm sure some of you experienced this. You work your ass off, you work during the holidays, you cut off your social life, and you just work. right? And unfortunately, people take advantage of that, right? People go in and people take advantage because they know you're a good person. They know that, you don't know your worth because why you're working so much. And they just basically bleed you to the bone. Okay. And, and then once let's say, you, the time comes for a promotion, you go in and, you get a promotion and, and all of a sudden your boss goes in and gives it to somebody else. And that person, obviously, you know them, you know their work because you're on the grunt floors. You kind of see everyone's work. And then all of a sudden you realize, holy crap, it's all about connections. It's literally all about connections. It's about literally who you know, right? There was a guy at the gym and I was talking to him about this and he was telling me this. And he was like, you know what's funny? I've worked here in this gym for 10 years. I've worked in this gym. I was expecting to go up to corporate level. And all of a sudden they go in and they hire this guy who's 10 years younger than me, just graduated college in the same corporate position I applied for. I come to realize that that person knows the CEO's friends and they're like family friends. You see what I'm saying? So the point is there's politics in everything you do. And there's nepotism in every field you look at. So I will tell you this, being financially free means that you're totally absolved of the bullshit that surrounds your whatever field you're in. Okay. There's a lot of BS in this world. And I'm telling you guys this, and also from personal experience too. You can work and you could be the hardest worker in the room, right? You could work so hard. You can literally work when people are sleeping, right? And even then, you still, sadly, after so much heart, grit, and sweat, you can't even get to that position because of one, connections, politics, and whatever. Well, luckily there's a happy ending to this story, right? There's always, as I always am, an optimistic. And the happy ending is you have to absolve yourself from corporate America. And that's what a lot of people are doing right now. They're trying to find a way out of this rat race, right? And some of them can't because they don't have the skills. But ladies and gentlemen, I have created a platform to teach you these skills, okay? I have created a platform that will take you from zero to hero. Obviously, it's in beta access, but I'm telling you, it works. I talked about Enphase, no one believed us. I talked about Tesla, no one believed us. I talked about Nvidia, nobody believed us. I talked about Marvell, no one believed us. I even talked about Broadcom. It went ahead in 10x. No one believed us. Okay. But then, Clover, no one talked about. And I was the only person talking about Clover to a point where you cannot escape it. Our platform works. Okay. And it's going to help you get out of the rat race. That coworker that you have that unfortunately does not have any signs of emotional intelligence, that is not for the team but for themselves, or let's say that promotion that passed you, you worked so hard for that promotion. You worked so hard, but yet it passed you because of some type of connection and some type of handshake in room that you were not in. I have a solution for you, okay? Imagine being able to understand and evaluate a company, right? And imagine being able to buy that company at an undervalued price. And imagine being able to sell that company as it passes the intrinsic value. But not just sell, take it to the level 3, where you start doing covered calls, to where you're basically selling an insurance type way and making a premium where you have an edge approximately 85% of the time until you get called in for it, or 75 to 85%, let's say, depending on how high of a premium you want. There's a way out. And it's not some, fugazi, something like, abstract, something that doesn't work. No. People that do this become rich. Go look at Benjamin Graham. Go look at it, okay? For Pete's sake, I've been talking about Benjamin Graham and Warren Buffett type investing for how long? And then all of a sudden, the CFO of Clover talks about the same thing, okay? Remember that LinkedIn post? So I'm telling you guys right now, okay? If you're sick and tired of this rat race, If you're sick and tired of leaving your family, leaving your dogs, leaving all this for a job that doesn't appreciate you, for a job that doesn't respect you, for a job that will literally replace you within 24 hours after your death, there is a way out of this hell. There is a way out. And I found it. And you know, rather than keeping all this knowledge to myself to benefit just me, I'm spreading it to all of you all. I'm spreading to all of you, right? Because I came from nothing. I started from nothing. I started from homelessness. I was literally beat down on the street, and I literally thought I was going to meet my creator, but somehow I ended up surviving that. And it was literally right after I sent my application to college as an undergrad, right? I only applied to one undergraduate educational school, one undergrad, because I couldn't afford to apply all the other ones. I couldn't afford to apply to Harvard. Harvard never seen my application because I couldn't afford to even do that because I was on the street. I didn't have any resources. I came from the bottom. But there's one thing that I was given, which was a brain. I was given a brain that was able to analyze a large corpus of data and make some form of a decision. And I'm telling you right now, this works. Look at my life. It works. And I'm sick and tired of Americans getting screwed over by nepotism and people with connections to a point where I'm going to show you how I went from zero to hero to a point where in the next 10 to 20 years, I'm going to own over 300 properties all around the United States. I'm going to show the world that this can be done. Okay? Because I'm telling you, I'm sick of it. I'm sick of it. And this is not some, you know, I don't want to talk about other YouTubers and all. This is not some bullshit. Let's take advantage of you guys. I'm trying to create a community so we can all prosper together. Okay. All right. Let's see here. You know, I want to look at the money market fund to see this. Hell yeah. Made the live crap. I'm at work tonight now. Private sector will let you go after 30 years. Service for two people. It's not who you know. It's who you, okay. Whoa. I wasn't expecting that one. I've never read a statement like that before. And you know what? Who knows? Clove is everyone's happy ending if they keep doing what they're doing. Yeah, exactly. Just wanted to show the Al of created resistance and support of Carvana levels to show more in the terminal. Yeah. Oh, so you on the terminal here? Did you show something here? Oh, there it is. Next earning for SoFi estimation is 19%. So it's estimating it could go up. Which one are you talking about? I'm not too sure. I love you too, Drew. I love you a lot. Al, hard work is for fools. Took me a long time to realize that. Exactly. And ladies and gentlemen, I was the biggest fool in the room. I was the biggest fool in Arizona. I'll tell you that right now. I was the biggest fool. I was literally the dumbest fool in Arizona. I will tell you that right now. Okay. And I'm trying to help each and every one of you. Okay. I'm trying to help you not to be a fool like me. Okay. I feel that lion looking for his meat is coming out of you, Al, right now. Oh, it certainly is. Right. I love you guys a lot because I'm tired of it. Right. You know, we have a lot of nurses in our platform. How many times as nurses have you been disrespected? How many times? Oh, you're just a nurse. How many times have you been disrespected by the healthcare system? Right? How many times? You know, I go in this field and I just look at it. I'm just like, what in the world is only in America does this exist? You know, only in this sector in health does this crap exist. Okay. Al Shire Hathaway. That is so funny. You've seen it, Patrick. You've seen it. You've been a nurse for a long time. You've seen it. Okay. This is not, you know, exactly. So this is not some esoteric, elusive, godlike thing that only, Warren Buffett can get. You can get it too. You can get crazy returns. You just have to know. You just need the data. You just need the team. You just need people around you. It's who you surround yourself with. Because I promise you right now, the only thing that your boss cares about is if you clock on time, and that's it. They don't give a shit about you. They don't give a goddamn shit about you, right? Because it's an assembly line, folks. It's literally McDonaldized now in every other field. And if there's one thing that I want my life to represent, if there's just one thing I want to do, is that I want to be able to set as many people as I can out of this bullshit rat race that we call America. Because I'm telling you right now, it has not been working for the middle class, and it certainly is not working for the lower class and the poor. There's a way out of it. There's a way out of hell. All right. And I found it. I found it, and I'm going to show you. And you're going to see it right in front of your eyes, right with this stock where no one believed. No one believed. Only us. Right? When the Clove gets me to retire, I'm putting Al Stock Trades emblem on the notice. Well, there it is, right? We're here to support, and we're going to show anyone who's is able to listen, and honestly, sadly, has an opportunity to listen, because sometimes people are working so much that they don't have an opportunity to go on YouTube, right? No, exactly. The difference between you and other YouTubers is you're genuine. Yeah, exactly. Listen, we're all going to go on the ground the same way. Oh, nice. Look at this. 500%, right? We're all going to go on the ground the same way. Okay? We're all going to go on the ground the same way. All right? We're all in this together. And we're going to show you a way to climb out of hell. Ladies and gentlemen, God bless you all. And, and all of you have changed my life, right? Being able to have a community. You know how hard it was for me to just talk about what I was seeing? Because I was seeing all this, but you talk about it to people, they just glaze over. But we made one of the most beautiful value investing communities on the internet. We have it now, and it's growing. It's growing rapidly. Right? And that's the saddest part, not having enough to buy more. How true is that, right? I love you guys. We're in this together. We're going to put God first, and we're going to literally stick it to corporate America, because we're going to go ahead and we're going to be the bourgeoisie. We are going to be the earners of the labor, and I'm going to teach you how to do it. God bless each and every one of you. I'll see you on the next one.